Hey guys, how's it going? It's Andy from Go Investing. Happy Monday. If you missed the video on Friday, it was basically explaining some additional reasons why I think the stock market might crash again in the near future. And so that video was just talking about how these news stories are just kind of piling up, and it's leading me to believe that we're going to start seeing some cracks in the overall market. And at this point, this is going to be a follow-up video to the Friday video. In today's video, we're going to be talking about 5 stocks that I'd be looking to buy if we go into a recession pretty soon. So from the numbers I've seen, at this point, it's between a 98 and a 100% chance of seeing a recession in the next 12 months. The textbook definition of a recession is 2 consecutive quarters of negative GDP growth. At this point, the first quarter of 2020, we had a 5% contraction, and the estimates for the GDP numbers that are going to come out at the end of this month are between down 40 and 50%. So at this point, it looks very likely that we're going to be seeing a recession. And as we start getting this information about the overall economic damage from the pandemic, I think it's important to start making a plan for what you're going to do. While the market has not totally followed the status of things going on in the world, if we go into a full-on recession and we get some devastating GDP news, I have a feeling that's going to push the market lower. So I think it's important to kind of plan out what you're going to be doing in the future. So in this video, I'm going to be talking about 5 stocks that I've kind of picked out as being attractive investments for buying during a recession. These aren't going to be the sexy stocks that I've talked about recently, stuff like Sonos that I think could realistically double in the next 12 months. When I say safe stocks during a recession, I don't mean stuff that's going to guarantee go up in price. The whole idea of a safe stock during a recession is companies that are well established and aren't going to go bankrupt during that time. So they're safe in the aspect that they're not going to be going under anytime soon, and you don't really have to worry about the day-to-day news, maybe a horrible earnings report that kind of makes you really nervous. These are companies that have been around, and most of them have lived through the past recessions and recessions prior. Before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. With that out of the way, let's get started and talk about the 5 stocks that I'm looking to buy if we go into a recession. When I think of stocks to buy during a recession, the textbook stock I think of is Visa, ticker symbol V. Currently, Visa is trading for $195, and it's up around 4% year to date. If you really wanted to talk about it, I could see switching out Visa for PayPal. PayPal has been one of my favorites and has been a top performer on the stock market so far this year. But I decided to go with Visa because it has the track record of being a publicly traded stock during the previous recession, and so that made it a lot more attractive. I definitely have PayPal as part of my position right now, but I think Visa is the safer position for a potential recession. When I put up that all-time chart, it is absolutely beautiful. You have a long history of stable growth, and you do have a dip during the past recession going from $21 to $12, but at no point was there any worry that the company was going to go bankrupt during that time. And actually the complete opposite, the company actually succeeded during that time. And the way that we talk about these smaller stocks, they can have good performances, but they'll get dragged down by the overall market. It appears that's what happened with Visa overall. During that time, their business actually expanded and the stock price went down. So if you could have identified that during that time, you would have made a lot of money. Visa is one of those safe stocks because of the way their business operates. Compared to a lot of the other credit card companies, they don't do anything with loans, so they don't have to worry about loan delinquency, which is a huge problem when you start heading into a recession. They also have around 50% of the overall payment volume, so they're a leader in the sector. They have the track record of doing well in the past decade plus, and they increased their business during the last recession. And because of those reasons, that's why I wanted to put Visa as my first stock I wanted to talk about in this video for a recession-proof stock. Let me know what you think about Visa, ticker symbol V, in the comment section down below. All right, the second stock in this video is going to be something that I've talked about a lot on this channel so far in 2020, and that's going to be Walmart, ticker symbol WMT. This has been one of my favorite blue chip stocks just because of how reliable it's been in the past and how crazy their fundamentals look overall. Currently, Walmart is trading for $132 and it's up 11% year to date, which is actually lower than I would have expected, but still, being positive during 2020 is very nice. Walmart has been one of those stocks that has done very well during the pandemic. They saw a 9% jump in revenue in the past quarter and a 10% increase in net sales overall. So the company is doing very well. And while people are stocking up to survive the pandemic, you're seeing that a lot with the numbers that they've released recently. They had a 5% drop in the number of transactions overall, but the overall transactions on average were 15% larger. It makes a lot of sense. People are going to stock up on supplies, so they're not going to be making as many trips. And as a result, the stock has done very well so far in 2020. When I do show the all-time chart, it is not as pretty as something like Visa. You definitely have some drops during the last recession, but it was definitely stable during that time. And then 2015. 2015 was an interesting time where they started to invest in their future by increasing their e-commerce presence, and they also surprisingly increased their minimum wage for their employees. Also during that time, they switched out CEOs and there was a lot of turmoil in the company. But after that time, the stock has been very reliable ever since and is one of my top stocks to buy overall, not just even during a recession. In those past 5 years, the stock is up more than 80%, and so I think it's a great buy pretty much at any price. And if we see a recession, I'm likely going to be adding Walmart, ticker symbol WMT, to my stock portfolio. All right, next up, I wanted to talk about a stock that I have kind of avoided a little bit. When I talk about the beverage industry, the company that I normally go to is Coca-Cola, ticker symbol KO. But after doing some research, I decided that PepsiCo, ticker symbol PEP, is actually the better decision for a long-term investment going into a recession than Coca-Cola would be. The main difference between Pepsi and Coca-Cola is their diversity of products. When you look at Coca-Cola, they are pretty much reliant only on their beverage industry, which has taken a massive hit as a result of some of the main places that it's sold, stuff like restaurants, stadiums, movie theaters being shut down because of the pandemic. Pepsi, on the other hand, has made a number of very smart acquisitions over the past decade plus that have made it so that their revenue sources are much more diversified than stuff like Coca-Cola. So the company saw a 6.6% drop in their beverage sales, but they saw a 6.6% increase in their Frito-Lay's sales and a 32% increase in their Quaker products. This makes a lot of sense as the average consumer isn't as able to go outside and consume food outside of the home. So their products like Frito-Lay's for snack foods and Quaker for a lot of their pasta and breakfast foods make a lot of sense why they've increased in popularity over the past couple months. Also from their last earnings report, I was very happy to hear that the company came out and said that they were looking very positive going through the rest of 2020. They mentioned that they're not going to be stopping or suspending their stock buybacks, and they're not going to be lowering their dividend anytime soon. When I saw a payout ratio of around 76%, I usually think that's a little high, but the fact that 6 days ago the company came out and said that that dividend was safe, I'm not as worried about it overall anymore. Also, they have more than 40 years of annual increase in their dividends, so there's a lot of stability when you look at Pepsi overall. That dividend is around $4.09 and is a 3.1% dividend yield, which is pretty solid. So as I mentioned, Pepsi has been very smart with their acquisitions over the years. They've bought companies like Tropicana, Frito-Lay's, Gatorade, and recently, back in March, they acquired Rockstar Energy. So they have a lot of diversity when it comes to their products and has made them very resilient to the overall market falling during the pandemic. With that being said, the stock is trading for $135 and it's still down 1.5% on the year, which is doing a lot better than a company like Coca-Cola is so far this year. When I put up the all-time chart, it is pretty nice, but it's not as nice as something like Visa. You do see a dip during the last recession, but as I mentioned, these aren't stocks that are going to go up in price during a recession. These are stocks that are going to do well on the business side, and they're not going to be at any risk of going bankrupt during that recession. So overall, I do like Pepsi a lot based off of their diversity of products. And while in the past I've been talking very positive about Coca-Cola, I think Pepsi might be the safer bet going forward. So let me know what you think about PepsiCo, ticker symbol PEP, in the comment section down below. Alright, so we've talked about the largest grocer so far with Walmart, and we're going to go down to the second largest one with Kroger, ticker symbol KR. This is actually the first time we're going to be talking about Kroger on this channel. Currently, Kroger is trading for $34 and it's up 17% year to date. It's really interesting to look at these sales numbers from the largest grocery stores across the country. You have Walmart, which is in first, and then with half as many sales as Walmart, you have Kroger, and then you have Albertsons, which owns places like Juul and Safeway, having half as much as Kroger. It's very interesting to see the steep drop-offs from these three companies. There are definitely some risks when it comes to grocery stores, as they're already operating on razor-thin margins. When you look at Walmart, around 53% of their revenue comes from the grocery store aspect of it, and Kroger has a much higher reliance on it, stuff from the perishable and non-perishables, and then the next highest being fuel, which you know we've had some problems with fuel in the past couple months, and then it goes down to the pharmacy. So they have much more reliance on the grocery store aspect of it as something like Walmart. So that's why I put Walmart above it, but I still think it's a fantastic opportunity going forward, and it has performed very well so far in 2020. So going forward into a pandemic, spending is going to go mainly away from places like restaurants and are likely going to go towards cooking at home. And so that's why I'm putting Kroger on this list. When I put the all-time chart up, it is kind of a whirlwind of emotions. You have a very nice push up in the early 2010s, and then you have a lot of momentum going up and down. So at this point, the stock has had a very nice 2020, but it's a little worrisome. So it's not the most stable stock overall, but I still think it's worthy of being discussed in recession-proof stocks or companies that I'm not worried about going bankrupt during the next recession that we're likely going to see. Kroger is one of these stocks that I still need to do a lot more research on it because I'm not super comfortable on it overall. It is a brand that I use almost exclusively at my home in Portland, but I just don't know enough about the stock at this point. So I'm very curious to see what you guys have to say about Kroger, ticker symbol KR, in the comment section down below. All right, the final stock I want to talk about is Altria, ticker symbol MO. If you go on any website or just look up recession proof stocks, you're going to see a lot of discussion about these sin stocks. As economic conditions worsen, there's a lot of statistical data to back up that people are more likely to purchase tobacco or alcohol products. And so MO, Altria, is the largest tobacco producer in the United States, and they have made major acquisitions in the past couple years, buying companies like Juul to get into the younger demographic range. While that acquisition has not gone as they would have planned, it has still done very well in the past couple years. Well, there's definitely been some changes since the last recession, and it seems like trends are going away from tobacco consumption, but when you look at revenue, the yearly revenue for Altria, you can see that it's been relatively consistent for the past decade. So while the numbers seem like people are going away from tobacco products, the revenue seems to back up the fact that Altria has still done pretty well. When I put up the all-time chart, you can see the nice move that went up until around 2017, and things have been declining ever since. And is this going to be the change in the economic conditions that are going to boost up the stock price again? I don't know, but I think it's going to be very interesting to see, as sin products usually go up in popularity during a recession. So it's going to be very interesting to see if a company like Altria, that has kind of been down in the dumps for a couple years, is going to be able to recover from this. And so I'm personally going to be staying away from Altria because of my moral grounds, and I don't want to invest in a tobacco product. But I can understand why people would want to invest in it, and that's why I decided to put it last on this list. As I mentioned, it's going to be very interesting to see where this stock goes, and I'm very curious to see what you guys have to say about Altria, ticker symbol MO, in the comment section down below. Thanks for watching my video on the top stocks I'm looking to buy during a potential recession. I try to come out with a variety of companies in this video. We went with the very safe stuff like Walmart, Visa, PepsiCo, and then we went to some of the riskier stuff with Kroger that has these slim margins, and then something like Altria that has been down in the dumps since 2017, but this change in economic conditions could change our situation. So I wanted to talk about them all in this video. Very curious to see what stocks you guys are watching, as we're likely going to be heading into a recession in the next 12 months. At this point, I'm leaning towards 100%, but the numbers say 98 to 100%. So let me know what you guys are watching in the comment section down below. Thanks for watching this video. I appreciate all the support, and I will see you on Wednesday.